fund a business that is making just 40 million a year in sales. We have those that will consider supporting your business if you're just making. We have Shona that is funding businesses from as low as 40 million in sales annually. And then we have funds like XSML that fund businesses beginning from $250,000 to about $5 million. We've even got the large global funds that are investing in Uganda. An example is the Bujagali project. Bujagali, we had Blackstone Group, which is a US-based fund. I think you all know Blackstone. Blackstone has $25 trillion in assets. They invested $120 million in Bujagali in 2017, and they exited for, they sold their shareholding in Bujagali to a Norwegian company for $277 million. We also have Global, which is also an American fund, J petrol stations. They invested in 2017, growing that business from 4 fuel stations to 40 fuel stations in 2020. That created so many jobs. They did more than just give money. Usually they will help you with your strategy, your operations. They can help you most times with forward and backward linkages to really expand your business. Once you get capital markets financing, you're not left the same after the investor leaves. There's going to be an expansion. So we're looking for companies that have those big aspirations. You're looking to grow. You're looking to, we're looking for companies that are looking maybe to open shop in places like DRC. You want to open a branch in Zimbabwe or Zambia. You're looking to sell. You're looking to grow. You're looking to expand. And so the capital markets and the banking sector work in different ways. And today we're looking at what capital markets for you. And this is one of the special things that the capital market sufficient money to fund their ambitions and their needs. And what do you have to say about that?
Thank you, Samuel, again. I think there's actually enough money in this market. I actually tend to think sometimes that there's more money chasing too few businesses in these markets. That is my impression. Why? For example, I'll speak for Agdevco. We've had money for 5 years. We want to deploy in Uganda, and we're looking for good businesses to take up that money. That's number one. I also know a couple of colleagues within the sector who also have money that they need to from a port of $200 million, for example, to bring some money here in Uganda means I can tap as much as businesses want here in Uganda. The issue is not about availability of money anymore, I think, but I think it's more about the quality of the businesses that money is chasing.
What are some of the challenges that you have found with when you're dealing with Ugandan farms? What are some of those hindrances that you find that have made it hard for you to deploy? We have so much money. You have a pot of almost $200 million, and yet you're not finding those companies that are ready to, to grow, to deploy it, to use your expertise, to use your money. What seems to be the challenge?
There are several challenges, but one of them being the fact that we tend to find that most businesses are not ready to fundraise. They know that they need money, but they don't know how much money they need. They don't know what kind of capital they need. They don't know what the right type of financing is for them. I am under the impression that most businesses in Uganda think that money can only come from a bank, from a commercial bank. There's limited awareness of non-banking financial institutions as an option, and probably sometimes a better option for your businesses. So I think that's a major challenge, limited awareness and also limited preparation ahead of fundraising are key challenges.
Can you just take us through some of those things that you need to know to prepare for capital markets financing? Things like good internal controls, you need an independent board different from management, some of those things that a global business would have, because one of the things we're trying to do is prepare Uganda to compete at a global level. We're already in the East African community. We are starting the Africa free trade area. And so our businesses need to be ready to compete with a business in Morocco. If you are, for instance, making shoes in Uganda, you need to have a system that can compete with another company in Ethiopia or in Kenya. You need to operate at that level. Would you say that perhaps there is a couple of things that internally with our financial systems, our human resource systems that we would need to look at to make Ugandan businesses ready to compete at that level and to receive financing from you?
Thank you again. That's a very good question for me. And I will answer it again by just simply giving you what I do, for example, look out for when I receive a proposal from a business. In Uganda, for example, at AgDevco, we look at Uganda as part of the East Africa portfolio. So when I get a business proposal, for example, from a business in Uganda, one of the things I have to do is to compare it to similar businesses across East Africa. Who is competition for it? Who is the business competing with? Not just in Uganda, but across East Africa, because we know that there's a common opportunity for Ugandan businesses across East Africa. Now, I want to choose those businesses that are competitive, that have an edge in the region, not just Uganda, but in the region as a whole. So one of the things that I want to look out for, or I look out for in those businesses, is the competitiveness of the proposal or the business that has been brought before me. Is it well prepared? What is the team quality like? I'm not going to hinge so much on the financial performance. Yes, it's a key thing. It's very important that these businesses are profitable, and it's a key criteria. But we know that sometimes the reason why businesses are not profitable or are not making money for their owners is simply because of the nature of the capital that they have, that just simply doesn't allow them to become that. So I'll look at the other support systems, the operations of the company that should drive value creation in that business and make it competitive. If they work, and I think that they're able to take the business to another level, then I probably then start thinking about the nature of its capital and its needs and how I can support that business to get there. The idea is that it's not just about me to invest in that business to make money for myself, but to make money as the business also makes money. How does it make money? By making a profit.
Yeah, true. We recently heard from a not very old company. We have a company called Citadel Medical Group that recently received initially $300,000 in support from XSML, which is one of the funds in the capital markets. They received additional money during the COVID times. COVID affected nearly everyone, and Citadel Group was able to receive additional financing of $3 million. And so they have $3.3 million from the capital markets. They are looking to, the XSML is looking to support Citadel to make it through that tough COVID time. They're helping them restructure the company, make it more competitive. And so that's one of the many things that the capital markets is doing. It's interesting that Citadel Group received financing only after 3 months of meeting one of our players in the capital markets. So financing doesn't have to, it's not necessarily that it's going to take a very long time. It can be very short time, especially if you already have an existing relationship. There's one key thing that we normally forget, that is to prepare for the tough times during the good times. You need to approach the capital markets before you become desperate. Don't wait for that point where you become desperate. You can explore the options in the capital markets before you actually need the money. You just have to have a growth mindset. Where do you want to see your company reach? And we have gentlemen like Ivan Senyonjo who will come and structure a plan for you. We already have several members of UMA, several members who are already in the capital markets. So I've already spoken about CIPLA. CIPLA is listed on the Uganda Securities Exchange. They also have private equity funding from TLG Capital, UK. We have Kakra Sugar Limited. Kakra Sugar has a 10-year, 30 million bond that is maturing in 2023. We also have BAT, which is listed. We also have other businesses such as the Trade Development Bank has come to us through a corporate bond. The MTN Group also received money from the capital markets through a bond. The East African Development Bank, the Trade Development Bank, Standard Chartered Bank, Housing Finance Bank, Stanbic Bank, and the African Development Bank have all come to the capital markets for financing. Some of these are financial institutions. They've come to us, and we are here offering, our services directly to you. It doesn't matter how big or how small you are. There's always room. We always have someone that will cater to your needs and to help you become a globally competitive business. We want UMA members to be not just locally competitive. We want you to be globally competitive. We want to take your business to such a level that you can go to the UK or wherever for a holiday and your business is running well. You don't have to, be the only person making things happen. We can structure your business in such a way that you will have a smooth operations when you're here and even when you're not here. So all these options exist. We're going to take a break, but before we do that, I will just ask Ivan to give us Maybe a closing thought for now.
Thank you, Samuel. I think, again, that for me, there's great opportunity in this market. This is a young economy. And we can only grow. We can only grow. Let's use the opportunity that is before us in terms of money. The money is there. And the money can come to you only if you are properly prepared. If you de-risk your businesses, the pricing of the money will be right for you. Everybody will be running after you to work with you. Let's prepare our governance. You don't have to have your business manned by your family only in order for it to work. I work for Agdevco. Agdevco is owned by the UK government. It is somebody else's money. But they know that it can actually work. The same should happen for your businesses. Let your businesses have people who add value to them at the board level, at the management level, and in the systems that you develop. And then allow the capital to work for you. But most of all, it is very important for you to know that what kind of capital your business needs at the stage where it is. A baby business, a young business does not need the same type of capital as a 40, 50-year-old business that has been successful over the years, and is just probably working in several countries. The needs are completely different. The good thing is that the market has different options for all of us. Let us try and tap into them. Sometimes the bank is the right option for you. Other times, non-bank is the right type for you. But it's up to you to think carefully about what you need and then go for it. Thank you.
Thank you very much. At this moment, if there are any questions from the floor, if you would like to ask Mr. Ivan a question, I think we can. Yes, we have a gentleman over there. Can we have a mic, please?
Thank you very much.
If you could
I'm Lawrence Katerega from Catalan Agents Company, smaller category. I have only two questions. What are the requirements? Number two, are you not going to choose only the big companies, those who already have the capacity to struggle their own? Like, for example, you said that you're looking at the company, those who have capacity that can expand even in a region, even in Congo, everywhere. So, would you consider also the people, smaller category? For example, there are those who think that when you are small, you are inability, you cannot, they judge us like that. They think that only those people who have the capacity are those who have invested already billions in their companies. But now you find when someone who may have a vision, but we lack only capital and to start everything. For example, the criteria of choosing someone who you are going to fund, for example, may be only looking how many land titles do you have? Where are you? Where is your premises? So I don't know whether we will be included. Thank you.
Thank you. Thank you very much for that question. Yes, I would say you are included. Ivan comes from a firm called Agdevco. Agdevco is one of several fund managers. Now, we have, as you would have banks in the usual in the banking sector. You would have Stanbic, you have Absa, you have Orient Bank, you have Standard Chartered. In the non-bank side, in the capital markets, you also have what I would say shops or different players. Agdevco is one of them. You have Pearl Capital Partners. You have another called XSML. There's one called Shona. There is Otis Capital Africa in Uganda. Then you can even go global. TLG Capital, TPG Capital, Blackstone, even NSSF, is a fund manager. So what happens is that we have various players who offer services to companies of different sizes. So even if you're a small player, there is someone for you. There is a fund called Shona. Shona invests in companies that make just 40 million in sales in a year, which is $10,000. The large companies can make that in an hour. You can just sell one consignment and you have 30 million. It's 40 million, it's very easy. But there are those companies that are making just 40 million startup in a year. Even those we give money. So Shona gives between 30 million, between 40 million and 100. They're between $10,000 and $100,000. So they basically deal with the small companies. They come in, they look at your systems, but all of them need a CEO who is coachable, because the capital markets is not just about the money, but about the knowledge as well. So you have ambitions to grow. Maybe you have one store in Kawempe, but you want to get another store maybe in Mukono. I'll give you an example of TLG Capital invested in a business called BAG Fuel Stations. They invested when they had 5 fuel stations. They left when BAG had 40 fuel stations. So the common thing is that they're always looking for you to grow. It might not be that you're going to Congo now or to Zambia. That may not be your level. Maybe you just want to move from one district to another, from one constituency to another. You're working in Tinda, you want to also be in Kawempe. You're in Kawempe, you want to also reach Mukono. It can be that. So we have different, as I call them, shops, depending on your size. If the government of Uganda is trying to do a pipeline, that's a big deal. We can bring in Blackstone. Blackstone, with its $25 trillion, can easily give us $3 billion from their $25 trillion. But if you're looking for a smaller transaction, even like we said, 40 million a year, we have people for that. If you're in the middle, you need $250,000, we have someone for you. We also have Ivan. If you're in the agriculture business, he invests in agro-processing, like he said, from the garden to the plate, anywhere there. You're processing milk or anything agricultural, he can help you. He invests from $2 million to $5 million, but he can negotiate and make some exceptions. So, the banks, we also have the shops in the capital markets, and we have the right shop for what you need. You're in manufacturing, you're in, whatever it is you're doing. Maybe you're making shoes, you're making milk, you're making sweets. And we're going to bring global best practice to your business. We want you to grow, create jobs. We're not looking to take over your business. We want to be on that journey with you as you grow. As you grow, we grow. That is the whole slogan. We grow as you grow. So we are in the boxing ring with you, and we're on that journey to you growing. So that's what we're doing. Ivan, do you have any responses to the question?
Not necessarily. You've pretty explained the issue of small versus big. There's something for everyone. what we need to do as a market, for example, and as players within the same market is to try and create awareness of the different options that are available. Your second issue about criteria, what it is that we ask for. That is not cast in stone. The thing is, I don't know if you know, but I think you're aware that when a bank wants to lend you money, or if you go to a bank and tell the bank that you want to borrow money from them, they will do some work around you to understand your assets, to understand your systems, to be aware, to sort of have to take a calculated risk, if I may use the phrase. If you go to them and tell them, I want 10 million shillings, they want to understand, do you have the assets to back up 10 million shillings, a loan of 10 million shillings? Now, other investors are also trying to understand you, to understand the kind of risk that they are getting themselves into. So they will do a lot of things in what we call due diligence. They'll speak to you. They'll speak to your employees. They'll speak to your customers. I do. For example, when I'm doing due diligence on businesses, I actually call up their customers. I want to understand what is the customer's view of this business before I start engaging. Because one of the things that we like to do is to engage with you for the long term. If I'm going in bed with you for the long term, I want to be sure that you're the right kind of business for me to work with. And you have the right kind of mindset to take the business forward. We will check on virtually everything about your business that speaks about the health of your business, not just financial health, but also operational health and issues around your systems. We'll check about everything until we have that comfort.
What I would say is that it's like I said, this kind of financing, you need to have it around as early as possible. Before you become desperate, you can engage Ivan, and he can give you some advice on how to run the business well. What Ivan is basically trying to look for in your business is to see whether you're running it following what they call proper corporate governance principles. You have that you're on the runway to growth. There are just a few things that you need for your business to have. If you already have them, it can take a very short time. Like we said, we have a business that received over $3.3 million in not just 3 months. So it might sound very exacting, but and the beauty of it is that once you establish this relationship with Ivan, is that along that journey he's going to give you loans, grants, additional money. One of the funds you will hear from is Pearl Capital Partners, which has funded Binzika, I think twice, KK Foods, a number of times, Chemifar. Yeah. So once you get the first financing, you're eligible to receive a lot more financing along the way. And it's not just the financing, but the constructive advice. They help you with the systems. So it's a long partnership. Globally, most businesses start actually with funding from the capital markets. If you look at Uber, Facebook, have all received, money from the capital markets. Yeah, to help them set up properly and to make sure that they are ready for long-term growth. So you think of it as a long-term journey. Don't think of it as a one-time. We have that short-termism where you want to just get money for 1 year, and then you struggle to pay it back, and then you get top up for 2 years. Think about this as a long-term journey. You have begun a business. Your ambition is to make maybe shirts. You want to have the best shirts. You want those shirts to be purchased. You want to make a good return. And you're thinking of this business existing for even your great-grandchildren. So you have got to make sure you set the foundation very well now, and then you watch the business grow with time. So we have people who are going to give you both the money and the skill sets and the expertise, all you need. So we are usually looking at your long-term success, but we're not going to stay with the business for a long term. We can invest for 7 or 5 years and then we move on. But we want to leave you running well. Yes. Any other questions? Okay, let's have one or two more questions, and then we break off for another session. Yeah, gentleman with the mic, can you please introduce yourself and your question? We will take your question and one other gentleman, and then we will have a short break and go into another session with experts from Deloitte in the next session. Yes, sir. Please go.
Thank you very much, gentlemen and ladies. My name is Sulaiman Nkutu from State Bakery, and I would like to know from Mr. Ivan, what ADEPCO, is it an acronym? Is it something which is more elaborate than that? Then number 2 is about your contacts. How can we locate you in case we need your services? Thank you very much.
I'll answer that quickly. AGDEFCO stands for the African Agricultural Development Company. That's all it stands for. And how you can get in touch with us? Simple. Speak to any of these gentlemen, you'll get to us. But we also run an office in Bugolobi. I'll give you my contact before I leave. Thank you.
Thank you very much. I'm Jumba Hannington from a company called Equator Solar. I'm also starting Jumba Energy Systems Limited. I would like you, will it be an experience? Because what I'm doing is that we have been doing solar for industrial companies. And we realize that they don't have the capital to invest in energy. Yet Kenyan companies are investing in their own generative systems. So in about 5-10 years, Ugandan companies won't be able to compete with the Kenyan companies because their costs of production will have fallen out. What I want to do is to co-invest in energy. But the problem I have found with the companies, which I'm sure maybe you have also found, is that when you come to invest, they feel like you are maybe taking or cheating them, or the doors are really closed, that they don't give you the opportunity to co-invest. For instance, Madam Barbara, I salute you. I went to Jessa Farm when Mzee was alive, and from there I learned a lesson that there was, they had this production of cattle waste, but they could not economically exploit it. So I ventured into a journey since then to see that I come up with a technology that can come up with a cost that can be economically viable. And not only for a company like that which produces biogas, but also other companies. But when you tell a company that, please let me bring this generative system and I invest, the doors are completely closed. I don't know how you have managed to penetrate these companies, or maybe there's another company that is required to go meet company to company, tell them that if this investor is coming, it's not going to take your business. Also, me taking a profit out of your business is not a crime. For instance, I wanted, we call it a private utility company, that I can come to your company, give you at a cheaper cost than that of Umeme, and for about 10, 15 years, we are working together. No, that spirit is not there. How have you found the market down there? Thank you very much.
Maybe I will answer that partly. I didn't get your name. Your name, sir, again? Hannington, yes. Now, the capital markets deals with players on both sides. They are what we call issuers and what we call investors. Now, even within our space, you may find that you have some surplus money that you want to invest in other companies, or in your case, you have both money and expertise. We have some shops. I hope you understand when I say shop. Shops means companies in that, funds. There's a fund called Otus Africa Capital that actually is receiving people with money and expertise such as yourself. Now, they are experts in approaching companies. They are already financing some companies. I'll give you an example of some of the companies that Otus is funding. Otus is funding a company that produces an interesting kind of product. They have lava. They have lava, or what they call larvae, that eat sewage. So they get these larvae and put them within the sewage, and they eat up that sewage. And then, so they're solving the sewage issue, but then those larvae are then, after that, harvested and turned into feeds, animal feeds. So it's an interesting business. But that is one of the several businesses that Otus Africa is funding. They also fund from about businesses of about that small, about businesses making about 40 million a year or even less. But they are experts in approaching companies. So if you find that you have money, you don't know how to approach investors, you can actually sign a deal with Otus Africa and you become an investor in Otus Africa. So you will have Otus Africa give its expertise in approaching companies, and then you can come in and on the advisory side and also give money, and they will help you deploy your capital in a good way. So the capital markets is really, our collective efforts working together to help each other grow. NSSF, for instance, is one of those fund managers who are also looking to invest in your companies. But I'm a saver with NSSF. So capital markets is really about us coming together to make ourselves more competitive and to grow. When Ivan brings his money to your company, you just like you would have a bank bring money of its depositors to your company, he is also getting money from other savers and investing it in your business. So there's always that bit of us growing. But we're not offering just money, but also expertise. So we have, whether you have money you want to invest or there is money you want to receive into your company, we have got a diverse set of shops and players who will meet your need. I'll take just one last one, and then we will go into I will introduce Mabel and her team, and there's a very exciting presentation in the next session I don't want you to miss. Can we hear from...
Yes, there is an online question.
Yeah.
And someone is asking, what are all the statutory requirements for private companies to go for capital market financing, like corporate deposits, bonds, and debentures, etc.?
Oh, maybe I could answer that very quickly. In order the first question really is about what works for you. If you're the company CEO or the board, you have got to first establish what do you need. Do you need a debenture? Do you need to issue a corporate bond? Do you want to issue shares, equity? We have a few, and now this is a very practical thing. We have got some people who have begun companies and the companies are successful, but I'm going to say this practically. You have maybe 2 or 3 wives and many children. You want to split the company evenly, so you want to issue equity. It can be one of those solutions. Yeah, but so the kind of financing that you want has got to be based on what you need. So the first part of the capital, what do you need? What is going to help the company thrive for the long term? And then once you've established that, is when then you can look at what statutory requirements apply to that solution. So the first thing is, what's the solution you need? And then after that, you know, what are the requirements? We have a set of companies in the capital markets called advisory firms, and advisory firms will help you with that process to advise you on what will work best for you. At this point, I want to invite Mabel Ndaula, who is a director at Deloitte, and Deloitte can give you advisory services. So it's at this, I think it's the opportune time to invite Mabel and her team to speak to us, to address us, both online and physically, about some of those questions. And yeah, just take us in depth. She has a team of 2 individuals, which she will introduce. Mabel, you're welcome, please. Oh, thank you so much, Ivan.
Thank you.
Yeah. Over there.
Good morning, ladies and gentlemen. Mabel Ndaula, I'm one of the partners in Deloitte East Africa, based in Uganda, and I lead the consulting practice. But I also wear a second hat, which is the reason why I'm here. I'm the Deloitte Private Africa leader. And so you must be asking yourself, what is Deloitte Private? So Deloitte, for one, is one of the big 4 professional services firms globally based. We're in over 150 countries. In Uganda, we have quite a sizable office, and we provide services in audit, advisory, and tax support. In Uganda, we have about 130 staff. So we are here with you. Now, Deloitte Private is an initiative that was set up by Deloitte to serve the mid-market globally, and that includes key segments, including high net worth individuals, family-owned businesses, family enterprises, including setting up family offices for families that might need services that are not really business oriented, but are more about managing the matters of the family. On that note, Deloitte Private has a global center of excellence, specifically serving the family enterprises. And we are setting one up in Africa this year, by mid-year, by June. We hope to be up and running. So should you require any conversation in the family space, that is something we are quite well equipped to serve you on. We also focus on private equity houses, which is where the capital markets come in. We serve private equity houses and their portfolio companies. And we provide advisory. We help frame the deals between the 2 investors and investees as well. And the other segment is non-family owned small and mid-sized enterprises. So I won't speak too much about private. Today's conversation is really for us to talk about the non-bank financing options to family-owned businesses like yourselves, manufacturers. Some of you, I understand, may not be family-owned, but the bulk of you are. And joining me today is going to be two key experts. One of them is our financial advisory leader in East Africa. Her name is Gladys Makumi. She leads our corporate finance service department or function that does mergers and acquisitions, financial due diligence, restructuring of businesses. And she's done a lot of work in Uganda as well as the East Africa region. I just want to see if she's online now. Can we flag Gladys? Gladys, please switch on your camera so we can see you. There we go. I'll first speak to Gladys and then I'll introduce Mr. William Chow, who is joining us all the way from China. He's our global family enterprise leader, very experienced in advising all sizes of family businesses because he doesn't just serve the Chinese market. So Gladys, let's first speak more about financial, non-finance options. There's a couple of conversations that have already happened here between AGDEBCO and capital markets. But sitting where you sit, you see a lot more than just the funding options in Uganda. Could you tell us what are the non-traditional sources of financing available to manufacturers in Uganda that may not already be here? And when you do, could you tell us what it takes for manufacturers to get themselves ready for such funding?
Okay, thank you, Mabel, and good morning, everybody.
Could we unmute Gladys?
Can you hear me, Mabel? Can you hear me now?
Some teething problems with our COVID virtual world. There you go.
Okay, so you can hear me now. Okay, thank you, Mabel. And good morning, everyone. And thank you for this opportunity where we can dialogue about funding sources, in this respect, non-traditional funding sources for private businesses, or what we would call, in this case, focusing on the manufacturers in Uganda. So Mabel, you asked me what are the non-traditional funding sources. So a lot has changed in the last 1 year with the pandemic, where people have had to relook at their businesses and ask themselves what is going on and what do we need to do around how we fund our businesses. So there's been a discussion with AGDEBCO around private equity firms. So those are some of the sources. So private equity usually comes in with a 5 to 7 year horizon, and they are usually equity investors. Some of them will provide some form of debt or technical assistance where required. And usually the other thing they do is try to work with the company around areas, around strategy where they may need to beef up their personnel or their systems or their route to market. So they will come in as a financial investor, but with the add-on or rider around seeing how they'll work with the business around improving its profitability and efficiency and its operations. The other category of funds are around the mezzanine financiers who they'll rank below debt but above equity, and what they do is that they'll provide some form of funding that is debt-like in nature, where it will have a certain coupon rate of interest, but usually structured around a bullet structure where you may pay it back after the term of the loan. So you take up the loan to either expand or augment certain operations within your business, and then after a period of time, once the business is stable, that's when you repay this loan. So it's usually used as a stopgap measure, especially around areas where a business does not want to cede control or ownership, which we see a lot in family businesses, where you need funding, but you don't want to give up any form of shareholding. So the other area, again, and I think it has been talked about, is where a company has a good track record and is able to raise funding through the capital markets, either through a form of a corporate bond. So there have been some in the market where you have a company that's fairly stable in earnings and it's able to raise a corporate bond in the market. The other thing we are seeing now is a lot of businesses are going back and looking at their core and non-core assets, and where they realize they have non-core assets in the business. They have to rethink, do we really need these assets in this business? Can we sell them off to be able to finance our business operations? So there are a lot of areas that a business needs to think about. And the other area would be around attracting a strategic investor. So you want to take your business to the next level. You want to invite someone who has done this before, in another market and has grown and expanded, and you aspire to have that reach that they do have. So you will look for this investor who will come in, probably take up a majority, bring in expertise. There may be some rebranding that happens around there, and then that will then take the business to the next level, because it just makes the pie much bigger for the business. So Mabel, those are more or less what we see around the non-traditional financing options available. And your next question is around, so what do I need to do to attract? So one of the challenges we find in our markets is around the financial information. So it's very critical for a business to have in place proper financial information. So your audited financials, your detailed management accounts, because as earlier indicated by Ivan, they'll come into the company and they'll want to understand what this business is all about. So they'll want to undertake a due diligence to just understand from a legal and financial and operational perspective, what is this business about and what are the areas then of improvement. In addition to that, it's also having a sponsor or an entrepreneur who has an executable vision for their business. So it's very important when you're attracting financing to know what this financing will be used for and how you expect to deploy this. So having the story around the numbers of the financing lends a lot of credibility to your business and is able to attract quite a lot of investors in your business. And the other thing is you need to be obviously knowledgeable about your market, your products, where they need to, what you're looking to, to go into. If you're introducing new products or expanding your current repertoire of products, what are you seeing in the market? What research have you done? Have you thought about the pricing of these products, their profitability, and basically how you're going to grow this business? So you do have to have in place a strategy or a business plan. You do have to have in place your own proper financial reporting. You need to have an organization structure that shows a form of a separation from ownership and management of the business, so that when you bring in other people probably to take over and run the business differently, you're able to to separate that from management. So thank you, Mabel.
Thanks, Gladys. There was a concern about the size of business and whether funding those sorts of options you're listing, what do businesses really need to know regarding if they are a small size and, for instance, have not gotten access to such funding before, which kind of funders out there can they access outside of Uganda? Are there any of those?
Thank you, Mabel. So funders exist. And even when you look at private equity, you have what are called venture capital funds. So those are funds that will look at early stage, businesses. So they come in just under angel investors. So when you're looking at your funding cycle, Mabel, you probably start a business and you'll have some friends who come together and provide you with capital, or even from family sources. So those are your angel investors. Then the business grows and needs to move to the next level. And that's when the venture capital or what we call early stage funds come in. And those ones will probably have a ticket size of between $250,000 to about, $2-3 million. And then after you get to that stage, then you're able to move then to another stage of funding where you probably may want to attract 5 to 10 to 15 or even $20 million. So you have different funds that will cater for this. And you also have funds that are very specific in terms of the type of industries or even the type of entrepreneurs that they'll back. So you have your agri-based funds, you have funds that only focus on food, you have funds that focus on technology and infrastructure. Just as an example, just looking at a fund that was set up by the African governments and AFDB, which is Africa 50, who are looking at people in the infrastructure space, and infrastructure will involve anybody in the technology space, anybody looking at probably some form of renewable energy, and they'll look at, they have an early stage fund that will also then look at businesses in that area, and we have others out there that will also look at then those early stage of funds and of companies, and then be able to invest in these companies.
I think the problem is because somebody is logged into this from here. Could you log out? Anybody who's logged in? There's feedback. They're logged in and they're here. That's the problem. Okay. Gladys, I think we can keep going.
Okay, so Mabel, I had responded to your question. I don't know whether you have a follow-up on that one.
Not unless there's anything burning in the. What we decided to do was hold questions until the panel is done so that we can respond to them. So one of our colleagues in China who will come on and talk about family enterprise, because we've switched times a bit, he's likely to come towards the end of this conversation. So Gladys, I'll go into the practicalities of when you've accessed this sort of funding. What are the critical success factors to making sure that, one, it achieves what you're trying to achieve for your business, and two, you don't end up killing a relationship that could actually grow, whether it's equity or debt financing? What are the pros and cons? And you've been in this space, so you know some things that have happened and deals gone sour. What should businesses know?
So thank you, Mabel. Sometimes when you are attracting external financing, one of the things is that the agreements need to be very clear cut. And unfortunately, it's like going into a marriage expecting divorce. So you need to have all those things laid out. So what happens if we disagree? What happens if certain things don't work out the way we mapped them in the beginning? So having a legal agreement that has been reviewed by your legal advisor. So you need to get a competent transaction lawyer when you're probably bringing in either a strategic partner or a private equity player, who will then ensure that your interests are taken care of, so that if something does go wrong, it's very easy for you to remedy that. And if you're, say, in this case, going separate ways before the exit period for the fund, then it's very easy for you to disengage without a lot of acrimony, because the agreements are very well laid out. So this then makes sure, because there have been instances where a private equity fund has come in and there's been a clash in vision at some point, and then you find that the sponsor has then bought back their shares. So they've raised funds from elsewhere to be able to buy back what they had sold to the private equity fund, and then continue with the business in the way that they want to. So it's very, very critical. The other thing is alignment of vision. So whoever it is that is funding you had better have the same values and aspirations that you have for your business. that's very, very critical, Mabel. If that does not happen, then you find there's going to be friction from day one. So usually when funds come in, you have what you call your 100-day plan, where you agree on what the milestones are for the 100 days and what needs to be done and whose responsibility it is to achieve certain things. The other thing they'll require is more rigorous reporting than what we are used to in our businesses. And what that means is that you have to get to a point where, management accounts probably needed monthly, which you probably never used to do before. So it's critical that any information that you agreed to produce is done, because the private equity funds manage funds on behalf of other people, and it's critical that they report how their investments are doing. There are certain papers and reports they have to do on a quarterly basis. So it's important that you assist them, in ensuring that this information is provided for. The other thing is to ensure that you deploy the funds for the purposes for which they were intended. So if it's to bring in new machinery, by all means, make sure you bring in that new machinery, you install it on time to ensure that you get the benefits then that will enable you to either repay your loan to your capital providers or to increase the earnings of the business going forward. So it's very, very critical that you deploy the funding for what it was meant for. And the other thing is also ensuring that you have, a mechanism where you spot red flags when things are not working out the way they should. For instance, imagine of someone who had decided to go into a certain venture in January, February last year, gotten in the funding, then COVID happens. These are things that are totally beyond your control, but you need to be able to have an early response system that enables you to stop, look at what the situation is, and then decide, okay, what do we need to do now? In dialogue with your capital providers, if it was a debt provider, you need to think about restructuring that facility to ensure that you don't go into default. If it is an equity provider, it has to be clear that this is where the business is. This is our short-term, cash flow requirements. Our, market has shrunk, for instance. So what do we need to do about this? So imagine, like if you take a case, the lockdown happened, schools, were closed, and you are probably providing certain, items to schools, and now your market is not there anymore. So you need then to think about how can I redeploy my manufacturing capacity to produce other goods that I can move in the market, or do I need to, minimize my operational costs so as to save on costs in the short term as I wait for the economy to reopen and for business to go back to business as usual or business unusual, given some of the effects that the COVID pandemic has had on our businesses. Mabel, over to you.
Thanks, Gladys. I still have some more questions for you. And this is really our conversation around the practicals around COVID and what it's done. Manufacturing as an industry has really been disrupted by COVID. So for an SME, a small, mid-sized in Uganda, if I want to get ready, could you walk me through what I must do in terms of priority? I know I've been hit hard, my market isn't the same. Meanwhile, I have competition from a sort of new market in the health manufacturing sector. What must I do? What's your practical advice for me as a small business to get ready to attract, and who must I look at attracting if I'm not sort of your biggest complier in financial reporting? I don't have my audited reports just yet. My cash flow issues are looking quite scary. What must I do in terms of priorities if that's keeping me awake at night?
Okay, thank you, Mabel. So as you keep awake at night because of how the business environment has disrupted you, it is to understand what is it that has been disrupted? Because it's very critical that you understand, is it your supply chain that has been affected? Is it your raw materials? Is it your market, route to market? What area exactly has been impacted? And based on which area has been impacted, you're then able to ask yourself, what then can I do? For instance, let's assume I'm in the healthcare sector, and maybe I was manufacturing certain items. You ask yourself, is there a niche that I can play in right now? But then even if I play in that niche, I don't have money. So who is it that I can talk to give me money, and money at a concessional and reasonable way? Because sometimes what happens when you're bringing in private equity, there's usually a long lead time around what I call the due diligence phase, where they come in and they look and they see this is what is required, this is what needs to be done. Can I then look at an accelerated program around, I need cash now as we wait for this to happen? And as a small business, you need a small fund, what we call the early stage fund, because they are less rigorous in their due diligence processes, and they'll actually roll up their sleeves and work with you and help you implement the processes. So you don't go to the big guys, you go to the early stage funds, the ones who will actually look into your business and understand what it is that you're struggling with, at that point in time. And those are the ones that will help, move you forward. And they will be very intimate with your business and what is going on. Because again, Mabel, you don't want to go and talk to people who will take such a long time to understand your business. And also then work with a fund that is domiciled in your jurisdiction. So find those early stage funds that are based, like in this case, in Uganda, who will assist you, because they understand the economics, they understand the macros, they understand the effects of COVID on business, they understand where you were before and what it is that you can do to get to the next level.
I'm speaking, but I don't own an SME. I'm here representing the participants. Is there anything burning on that topic? We want to keep this as practical as possible. I see a question. Is there a roving mic anywhere?
Thank you. What I want me to be understood, it is that even a small category has the capacity to grow. As you see, big businesses may be given billions, but a small category need not really just billions, can be need little money, maybe US dollar 100,000. But it can do miracles. Maybe need just infrastructure or equipment to expand the market or up countries or in Uganda, because there are those businesses compete here in Kampala when they are limited by the funds to go to up countries. So capability of a business, I don't know, maybe we may be weighed, where are our products, where have we reached? Where are you supplying your product? Where is your market? Where is your product there in the field? How is it performing? How many people are benefiting? For example, do you employ some people? If we add you the strength, can you employ more youth who are on the street? So my concern is that maybe because there are those who said no. When after looking at your proposal, business plan, we see your papers are good, we see everything, it is okay, but you don't qualify to be given at least 2 billion or 1 billion. You qualify only little money, like 600 million, and we don't fund that. Maybe you can look elsewhere. So I see as an injustice, because even me, I have a right in my smallness. So I'm sorry to ask you such question, but that is the way, here we are. There are so many businesses, they have the capacity, but they are on that level. Thank you.
One more? Oh, I see another one. Okay, two more, just two more. Yeah.
Thank you very much. My question is just direct. I'm 35 years old. I own a company called Best Uganda Limited. I deal in beverages. At the youth, I started 8 to 10 years back with not more than $3,000. But as I talk, I may be around about $400, but I don't own any collateral apart from vehicles and whatever. And most of the bank here and these people giving a capital and whatever, they mind much about the land title where your premises is, yet you are renting, or you are just somebody helped you to start from there. So can those people help us without that thing?
I see some of these questions are at Devco and Uma. One more. Thank you.
Yeah, thank you very much. My name is Victoria Nannozi from Nisi Classic Cleaners Limited. Yeah, I appreciate the presentation. Yeah, you've given us alternative financing. One of the major concerns here in Uganda is the interest rate. I don't know comparatively if it is something this alternative financing are addressing. And then I would also like to hear about the local alternative financing that we have that we can compare with what we are receiving from abroad.
I will ask the UMA team, and maybe at DevCo, you want to come in there on local alternatives. I know you spoke about it. I'm not sure if Edward is here. PCP is in the next session. So let's pack some of those questions, because I know when the panel comes on board, we will look at that. Okay. Uma has a burning response.
Thank you very much. Now, some of the local alternatives that are there that we can look into could be, first of all, is the capital market. That's one of the local alternatives that we have. Then we have quite a number of circles, investment clubs that are not being tapped into. And I think if we bring them together and we have a conversation with them, this can help to push financing. Even then, they have a platform through the Capital Markets Authority. I think that could very be of much help. Thank you very much.
Thank you, Uma. So I think you will get responses on the specific local opportunities with the panel. What I'll suggest is I hand over to that panel, and perhaps we can talk more specifically around the nuances of family-owned businesses and the sensitivities around letting go of part of the control, how other businesses are doing this after the panel. Thank you, Gladys. Please stay online just in case of any additional questions.
Thanks, Mabel, will do.
Thank you so much, Mabel, for that outstanding session. We still have Gladys online, and we're going into, we're taking you deeper into the capital markets with this next session. There was a question about interest rates, if I heard that right. Now, the interest rates do exist, but they're not the standard commercial bank interest rates. So we said you can get private equity, and then you can also get that private equity, shop that gives you the money, can also lend to you. But they won't lend to you at the standard bank rates, or they won't lend to you with the same terms of collateral, because now they are part of your business with you. So whatever loan you will get will be customized to what the business needs. So it's not going to be a crippling process. What we try to do in the capital markets is customize as much as possible to the business and its journey, its trajectory. We want you to prosper. We are with you to, to grow. I hope that answers that question. I'm going to introduce, we're going to have two amazing individuals on the next panel. One of those individuals is joining us from Nairobi. Patrick, can you hear us?
Yes, I can. Morning, Sam.
Morning, thank you.
Morning.
I'm going to introduce, read a very short profile. I'm not going to really say too much because this is, I think we all know Patrick Mwihire is the former CEO of Stanbic Uganda. At the moment, he is the Regional Group Managing Director and Regional Chief Executive of Standard Bank Group, Eastern Africa. He moved to that position on March 1st, 2020. And I think that speaks much. He's going to give us, Patrick is going to speak to us about valuation and mergers and acquisition. It's one of those ways in which your company can grow through merging and acquiring. You can grow your business in that way. Remember, the capital markets is about growing your business. Mergers and acquisitions and valuations are an important part of that. The second individual on the panel is Dr. Edward Isingoma Masiko, who is with us right now physically. I'm going to ask Mr. Edward Masiko to take the seat on the left. Edward has been in the accounting, finance, investment, and administration fields for well over 18 years, and he's the managing partner at Power Capital Partners. He was a part-time lecturer and has mentored many accountants at Matia Business School in Kampala for over 15 years, retiring in 2016. PCP is licensed by CMA and currently is deploying its fourth agri-focused yield fund into the Ugandan-based SME agribusiness world. PCP has invested in several members of UMA, such as KK Foods, Clark Farms, Kemifa, Naseko, Sesako, Biinzika Poultry, and many more that I think Edward will briefly touch on. So I'm going to just take a seat next to, take a seat next to Mr. Edward, and then we can get the session started. Okay, thank you very much. That is your mic, Edward. Maybe we could begin with a word from Patrick. Patrick, could you give us your opening remarks about mergers and acquisitions, valuation, and some of the challenges that you think that the manufacturers in Uganda need to overcome in terms of their mindset towards mergers and acquisitions? I would say I did a small research on M&A in Uganda in 2005, and there are very few firms that were looking to do that or even understood what mergers and acquisitions would do to grow their businesses. And also, I think valuation is part of M&A. You need to increase the value of your business. Maybe you could grow by being acquired by a business, or you could grow a business by acquiring another business. So generally, what's M&A and why do you think it's not so popular?
All right. Well, thank you, first of all, and I hope you can hear me clearly.
Oh, yes, we can hear you.
I think one of the myths is that, and I had this question in the prior panel, that there's only one form of financing and interest rates, etc. There's always this obsession about just debt financing on its own. And I think that that's one of the challenges that we have in the market, is not to appreciate that companies' balance sheets or their capitalization grows and emerges as the business evolves. You start off with your own savings as a small startup or angel investors. The business grows, it starts to attract venture capital. It matures, it starts to attract private equity. And then at that point, you can start looking about how you put debt and leverage on the business, because then you have some cash flows, you have a history, you have some predictability on your cash flows. And then debt makes a lot of sense. But oftentimes, I think entrepreneurs want to start with debt, and that's where you get into a problem, because all of a sudden you've leveraged a business, and no business plan ever works to the T, 100% as you expected it to. So you don't have a lot of wiggle room, and all of a sudden the banks come calling. So I think it's important to step back and say, where am I at my stage of my business, and what is the right capital structure? And as it evolves, then you continue to bring in and attract more capital. To your specific questions about why strategic sales or M&A don't really seem to happen in the market, one is that there's also, again, and I want to look at that question through, 4 stakeholders. What does it mean to the company? What does it mean to the management and employees? What does it mean to the shareholders? And finally, the customer. Oftentimes, we also confuse management control with shareholder control. And you need to specifically look at that. You can have management control, or you can cede management control, but not necessarily cede shareholder control. And the reverse is also true. So a lot of times, entrepreneurs feel like there's a loss of identity when they bring in a strategic buyer, but they forget the advantages of a strategic buyer. They can capitalize, they can bring operational synergies, they can bring access to a wider management team, to the company. So there are huge benefits to that. Of course, there are some negatives in terms of loss of control, but you don't always have to lose control. You can cede a minority stake. You don't have to sell the entire thing. From a management and employee perspective, it provides long-term stability to careers. It benefits the company to being part of a broader, larger enterprise that brings in some skills. From a shareholder point of view, you capture certainty for today's market value for the company. There are benefits and synergies that may come from collaborating. And also, finally, for the customer, it brings a much bigger, larger business together that gives certainty to the customers as well. So there are all those benefits that bring M&A into the picture. The other thing you also touched on, Sam, was valuation, which always also plays a trick on people's minds. They always feel like they're selling for peanuts. But they also don't recognize that ultimately what this strategic buyer is bringing is future growth, and they're bringing in future expansion of your EBITDA. So you're going to own 100% of a small thing today, but I would rather own 40, 50% of a much larger enterprise, 3-4 years down the road. So again, that breaking those shackles of thinking now, thinking fixed buy, thinking it's better to be a big fish in a small pond, and failing to see the synergies that come out of a deal. And also today, there are many ways in which to actually protect yourself on valuation. There are ways that you can have earnouts. Earnouts essentially means that we can agree the valuation today, but then if I do meet certain targets over the next 2 to 3 years, there's almost like a bonus payment that comes back to me because I've delivered on those projections. So there are many ways to structure the way you can extract more value, because at the end of the day, the buyer is coming in to buy a business plan, and they're paying a price for that business plan. But if you disagree that my plan is not aggressive, or is too aggressive, but if I'm willing to live with that plan and deliver on it, we can also agree that how you compensate me for those additional shares later on in the future. But I'll pause there, Sam, if there's anything else you want me to specifically expand on. Thanks.
Yeah, thank you very much for that opening. I think also at this time it's important to understand when would you sell your business? When would you consider M&A? What are some of the practical things? If somebody was an entrepreneur, they began this business, perhaps they wanted it to last a lifetime. What, in your opinion, would trigger or should trigger an entrepreneur to consider maybe merging with a larger firm or acquiring a firm or being acquired? What, in your view, what some of those telltale signs that perhaps it's time to consider M&A?
Okay. Let me twist it and just say, what are strategic buyers looking for in a company? If we can look at it from that perspective, it will give you some sort of guidance on what and when you should be thinking about this. So what are companies looking for? They're looking for a stable operating business model, which can be further developed, okay? They're looking for solid revenue growth, as well as strong margins and cash flows. So we want a business model that works. We want strong revenue growth, and we have a stable and operating cash flows. So if you don't have those two, you're obviously not going to be attractive. We're also looking for a strong management team because you want to leverage off that management team to grow the business. So that's another important distinction. The industry has to be an attractive one. What are the industry fundamentals? Is the industry growing? And is your business growing in line with the industry or above the industry? Then there must be an ability to grow the business through organic improvements. So are there things that we can do, add new lines? Are there new products that we can introduce into the business? So there has to be that opportunity to be able to expand, because ultimately what we're trying to do is we're trying to build a business from X to Y. So move it from 100 to 200. And then there must also be an opportunity to acquire the business at an attractive valuation. So those are the things that I would say make you an attractive. If you don't have any of those, you're a startup, you're loss making, you don't have a business model that sticks together, you're in an industry that's just been hammered by COVID, I would suggest that you don't try to do an M&A deal at this time, because first of all, you will get an incredibly low valuation and you won't attract buyers because of all those negative sentiments. Thank you.
Thank you so much. At this moment, I'm going to introduce one other speaker that is online. That is Narcis Tumushabe. Narcis, can you hear us?
Yes, I can hear you and I can see you.
Oh, thank you very much. I'm just going to read your short profile to members here at UMA so that they can understand where you're going to be coming from. Mr. Nas, as you can see, is a practical man. He's in the field. Mr. Narcis Tumushabe is the managing director of Wika Seeds. Wika Seeds is called Farm Inputs.
Kaya Center.
Then Mr. Narcis is going to give us a small testimony about financing he received from the capital markets. Mr. Narcis, are you still?
Thank you.
Just give us a small
Thank you.
experience-based testimony about the financing you received. If you could tell us how much it was and the process it took to get the money.
Thank you, and I hope everybody is able to hear me. I've removed the video to increase and possibly make the bandwidth accommodate the communication. By names, I'm Narcis Tumushabe, as already indicated. I manage a company called Farm Inputs Care Center, in brief, Wika Seeds. It is an agro inputs supply company. We do production, we do processing, marketing of improved crop varieties and other inputs aimed at increasing productivity on the farm. The company was founded in 1999, and we are more than 20 years into business. And in 2010, we were among the few companies that were able to access branded financing from the equity investor, Par Capital Partners, who were managing the fund on behalf of the African Seed Investment Fund. Just very quickly, in terms of what we went through and how we came to that level, is to understand the agricultural terrain in Uganda is quite challenging. I wouldn't want to go into the details of how the agricultural sector in Uganda is challenged, but when it comes to supply of inputs, specifically seeds, it becomes now more complicated. And therefore, we were working all along with commercial farms, with commercial banks, sorry. We were working with commercial banks since 1999 at the time of our founding, but we had never got any financing facility that could go beyond 1 year. Either the money would come in the form of contract financing, invoice discounting, or overdraft for a period of maximum 12 months. And therefore, in 2005, the company was thinking about growing bigger in terms of seed production, in terms of seed processing and packaging. And therefore, we acquired some infrastructure from government that required substantial capital investment. We had hoped that the commercial bank we were working with would look at our business plan and extend a loan that would cover about 7 to 10 years. Initially, the commercial bank was interested. They gave us all due consideration, including giving us a short-term overdraft facility to finance acquisition of government infrastructure. I think a number of people in the house may know about Uganda Seed Project or Uganda Seed Company, which belonged to the government. The promise was that the commercial bank would eventually get approval to extend the agricultural financing loan that we had requested for 7 to 10 years. But along the way, the commercial bank could not get the approval given the high risks considered in the agricultural sector in Uganda. Now, the company was now choking on servicing the short-term loan that was used to finance a long-term facility. So it was by good luck that Para Capital Partners came on board, and indeed they were keen to look at the sectors within the agricultural value chain that needed attention. So the African Seed Investment Fund came our way, and we were able to catch their attention and go through the processes. I think the key issues now, of course, people will talk about due diligence, we'll talk about many other things. I think the most important thing is the appreciation of a business model that to do seed production, we were producing about 1,000 metric tons of seed by 2009 when the company was struggling. But our projection was that within 5 years or so, if we had the right financing, we can reach 5,000 metric tons of seed. And therefore, African Seed Investment Fund through PCP understood our business model, but also came with a few conditions which I think most businesses in Uganda would like to learn from. The first one is that since its founding, the company was owned by one person. He owned basically 100%. PCP coming to invest came and said, you know, looking at the gearing level, we cannot give you more debt. We would rather give you equity. And therefore they asked the sole proprietor, the majority, the full owner, to give up some shares. And therefore they were able to take equity where they took like 30% of the business and the majority shareholder remained with 70%. Still, that could not be adequate given the growth plans the business had. They considered another branded financing in the form of preference shares, preference redeemable shares. These shares also came in handy because for the business to recapture the model it had developed over time and been impaired by lack of financing, that's where the money came. But at the same time, a business of seed involves many contract growers, many smallholder farmers. There was a need for really short-term working capital that we needed to maintain. So in addition to ordinary equity and preference shares, the investor also brought in some shareholder loan to facilitate the day-to-day running of the business. Now, where the money was applied, the commercial bank, which had given the short-term funds that were growing with interest and default, was able to sit now on the table and listen, something which possibly would have happened much earlier. But at that stage, the bank was into a recovery mode. When we would sit for discussion, it would not be actually a discussion of restructuring, but it would be a restructuring of recovery. But this time with an investor on board, the bank was confident now to sit with us and discuss the restructuring. Whatever loan outstanding we had with the commercial bank, the bank was able now to extend it for a period of 3 years. And we would also do trading, generate positive cash flows, and service it within 3 years, and at a reduced interest rate. Just for the team, for the people in the house to know, we were getting the commercial bank loan at 23% per annum interest, but under the arrangement with an investor coming on board and giving them confidence, the interest rate was reduced to 14% per annum and extended over a period of 3 years. I wouldn't want to go into the actual numbers of how much it was, but at least it is to understand that it was in the range of $1.5 million thereabout, which we needed to service in a period of 3 years. So the money which came in, especially the ordinary capital, together with some bit of preference share, contributed to reduction of the principal amount that the commercial bank was demanding from the business, and we were able to operate. I think in terms of the financing and how it came in and how it changed things, surely the production level where we are now, we are more than 5,000 metric tons of seed every year. When the investor was coming in, I've already mentioned to you, we were about 1,000 metric tons, which shows the leap we were able to make with the investor coming on board. Of course, we
Thank you very much.
had challenges, and many people fear about leaving, maybe bringing other people to own the business, which traditionally they have owned alone. There was a mindset to work on the majority shareholder. There was a requirement that we need to recruit a full-time managing director, and the majority shareholder stepped aside to remain a chairman of the board. We were required to share financials, including cash flow projections and utilization reports every month. Management accounts were mandatory. The composition of the board had to be restructured with additional board members coming on board, and we have a 7-person board with the investor also participating on board affairs and direction. The schedule for the board meetings was very clear, and it had to be adhered to. And I think there are quite a number of changes which come in, and in terms of governance, things start coming through. We used to use audit firms that would maybe end up telling us our enterprise is at stake. We brought in KPMG, I think, which is among the top tier audit companies, and it built the confidence in the numbers that once I give financial reports, they really mean, the numbers mean what is on ground. And I think we have never looked back. 10 years later, at least we cleared the loan of the commercial bank to zero balance. We cleared the shareholder loan to zero balance. We still retain some ordinary share of the investor, which we believe possibly in the course of this year, if it was not for 2020, under COVID, which brought our businesses to knees, we would possibly have financed the exit of the investor. So it is possible that if one is really looking around and thinking of how else can we go about accessing financing for growth, but also accessing financing in a business sector that is likely not to be understood and appreciated by majority of the commercial institutions, then we have opportunities to look at. And especially for the agricultural sector, we have had a lesson to learn, and I think we are available to share some of the other experiences. Of course, in terms of management, indeed the board would oversee the recruitment of management. Surely it wouldn't be business as usual if I look at how the business was running before the investor came on board and how the business is running after getting the investor on board. The process for investment took us a little bit more than we thought initially. It took about 8 months, but it could have been shorter if our numbers had been properly presented. You know, there is where you present your financials, and in the course of due diligence, someone finds gaps, and then to explain all those gaps, it goes back to restructuring your balance sheet, and eventually it costs time. So I think in terms of how long it took, it was more to do with the company's way of presentation and preparedness, not about the investor's readiness to lend the money. The other component is to do with impact. Many times we tend to look more at financial performance indicators and we forget about impact. Because the farmers who do the production of now 5,000 metric tons of seed would be out of business if we maintained 1,000 metric tons of seed for production. If we look at the farming communities that are now able to access improved seed, there is a contribution that we make, which may not be in monetary terms, in terms of the profits and whatever, but in terms of the society where we live and the impacts on the communities, there is mileage, which I think our investor took high, because they may not be all investors looking at impact. Majority may be looking at the key ratios which most financiers will be interested in, the payback period, how much am I earning, and when do I exit. So, but at the same time, the other difference is that when we had challenges of maybe meeting certain deadlines, because we are part and parcel of the board with the investor, it was easy for them to understand and possible.
Yeah, Nasis, thank you so much. Thank you so much for that very detailed presentation. I think you have really given a very granular account. Dr. Edwards, Nasis is one of your beneficiaries, one of your investees. Could you just expound a little bit from the other side of the aisle? He just explained he was in peril, he had loans, and sector was very, in a hard place, but you managed somehow to invest and turn the business around. So could you just, what was it about his business and other similar businesses to his that you looked at that give you the strength and the courage to invest?
Thanks so much. I think just to elaborate, I would say in affirmative, Nasis' description is real of what happened. And when I sit here and look back more than a decade ago, and I say, where have we come from? That's interesting testimony. Back then, the real challenge was there were no other private equity transactions in this market. There were no other SMEs that you'd say private equity players have come and put capital and grown the business from point A to point C. Now, that was the real problem. And I think back then, Japheth Kato at the Capital Markets Authority was always like, when are these businesses coming to market? But they can't. They're not ready. They don't even understand what the market means. So when people talk about the market, the financial markets, and think about stock exchange and think without thinking about the alternative financing structures, as Nasis has described, that becomes the gap. And that's where we sit. And that's where we come in and say, fine, we need to demystify some of the things that happen there. Today, where we sit, we look back and say, there are so many equity transactions we've done in this market, private equity, we've done venture capital transactions, we've exited them, and we can put our heads up and say, do call put options work? Yes, they work. We've tested them. Do share pledges work? Yes, they work as a form of security. It's not always going to be about land and titles in the bank and things. Do personal guarantees and corporate guarantees work? Yes, we've tested all these things. So coming back to your question of what was the story behind the story on our side? As Narcis described, I'll not repeat what he said, but what I will be keen to share is that in that particular transaction, we were quickly involved with scenarios like the bank is sending you a letter saying the receiver is on his way. And you've got to deal with it. and you're the equity partner, and you're going to come in here. So you've got to handle it. We were faced with things like, for us to sit on the table, we need to have refinancing of some of our debt. So we were able to then refinance some of the bank debt so that we restructure the debt structure in the business. So from where you sit as a private equity player, you want to be real about structuring something that is going to help the business. The challenges that come with that is that many entrepreneurs, even those in this room, will only reach out when trouble hits. So you're actually dealing with the fire as it is burning, and you're having to put it down. So you're not dealing with it ahead of planning. We've seen recently where some people who have reached out for private equity and venture capital money, even members of WUMA, reaching out and saying, I need the money in 9 months. So I need to give you time to do your DD. I need to get a term sheet agreed. I need to negotiate well. I need my advisors to support me. I need to have the transaction done and dusted 6 months before I need the capital. Now, the moment someone is talking to you like that, it's different. So you are able to do the best of the best structuring that can happen, and all parties are able to be aligned without any duress or pressure on when you do it. So just to share a little bit, the key points in the FICA transaction as shared, and I'm glad Narcis has gone quite a bit. He didn't have to share all that, but I think he has been able to do it in the spirit of Ugandanization. But we were able at our end to assess, decide that actually we needed, one, to restructure the bank loans that were poorly structured. We needed, two, to negotiate with the banks to allow them to exit before we start our own exit process. So the moratorium period was quite lengthy. We were able to discuss what is the actual need and form of it. Is it going to be a combination of preference shares, equity, straight debt, and working capital facilities? So we're able to do virtually all the four in the same transaction. 5, we were able to decide that, again, this was a family-owned business. The promoter, the entrepreneur who was the main owner, owns it. His thought was, I've educated my children, they need to come and run this. Narcis at the time was a consultant in the seed industry and a senior lecturer at Makerere. But we were able to hire him, and he came and ran this business to where it is now. And I think both ourselves and the entrepreneur are pretty pleased with what has come 10 years later. But I don't think the entrepreneur would have expected that at the time. Because, of course, many family-owned businesses will say, you need to hire my daughter, you need to hire my son, you need to get my sister, you need to get my brother. But I think we've come to see those challenges in family-owned businesses because most, if not all, very close to all agriculture SMEs in Uganda have a link to having started as family-owned businesses, and we continue to see some of those challenges. Thanks.
Thank you very much, Dr. Edward. Dr. Edward is actually based right here at the WUMA Showground, so he's someone you can always consult. I think, do we have Mr. Chow still online? Mr. Chow, can you hear us?
Yes, I can hear you, yeah.
Oh, his child.
Can you hear me?
Yes,
Can
we
you hear
can
me?
hear you. So we've just spoken a little bit into how a family business was transformed to become a major player, in the seed industry. We wanted to just maybe get a few, remarks from you about how you have seen similar transformations in your jurisdiction. I believe you're in China. If you could just give us, an experience from there.
Okay, thank you all. I'm William Chow. I'm the Deloitte Global Family Enterprise Leaders. It's glad to share my perspective with you about family business from a family business angle. I think first of all, everyone knows that the pandemic have bring a lot of impact, negative impact to different countries. And according to IMF last year, October report, I think globally, the advanced economy, their GDP expect to drop by 5.8%. And for emerging economies, it dropped by minus 3.3%. So overall, no matter you are family business or big public company, they are all being impacted by the COVID-19. But because Deloitte study a lot of family business, I think there are several characteristics that we think family business can survive better during crisis. I think there's 4 points I want to share. The first point is family business very focused to take care of their employee, because family business usually focus on the loyalty of the employee. So according to our surveys, family business will not necessarily easy to lay off their employee during crisis, and they are more willing to use their family fund to support employment. So not like a public company, during crisis, they may lay off an employee, etc. So the employee loyalty is a number one priority. The second one is to take care of the community. I think the family enterprise, family business, they tend to think to give back to the society is the number one priority. So in terms of the philanthropy, charitable event, they can through crisis to build actually like the family legacy or reputation. So don't waste any crisis during the pandemic. The third one is to take care of customer, because family business usually have a more concentration of ownership, so they can make decision more quickly than a public company. So they can respond to customer needs and customer requirements are more timely in particularly in crisis like this. Last but not least is to take care of the entire business. So I think all in all, during the pandemic, we see some family business, particularly in a manufacturing perspective, they quickly transform the manufacturing vehicle into producing like masks or some healthcare product to give back to the society. So this kind of things are actually, because the crisis will be over. So after the pandemic period, they are the company that are in the well position to grow compared to very large corporation. So that is something as a family business. I think if they continue to take care employee, take care community, take care customer, and take care their own business, particularly to reserve cash, etc., will be the success ingredient for family business to survive over the COVID.
Thank you, Thank you so much, Mr. Chow. Patrick, are you still on? Patrick,
yes,
can you hear us?
I am. Yeah, I can hear you.
I'm going to ask Patrick one question, and then I will open to the floor to take questions. Speaking about M&A and valuation in terms of a family-owned business, we've just had the testimony of an entrepreneur who ran such a business, had issues with the bank loan. He took on private equity and sold some preferred shares, able to turn the business. If somebody was running such a family business and was looking as the next step to do M&A. What advice would you give them? And then the other question is, does the bank also offer this service?
Yep. So Sam, I think one of the things that I would advise is, I would call it putting your house in order. And putting your house in order effectively means getting the numbers right. I think, you heard from the story on FICA, not having the numbers right can cost you 8 to 9 months of a transaction. Having a believable and credible business plan that you're executing on, getting the governance right. Governance is really important. Separating yourself from the company, and actually have the company basically run with the right governance structure around it. Introducing external board members, critical as well. Independent board members that can provide some guidance, so that the board is just not littered with your family, because what ends up happening is you all blindside each other and nobody can bring in help. Getting a credible CFO. CFO is one of the most important roles when you're getting your business ready. So, yep.
We have the finance minister, right?
Okay.
We're going to receive them. If you would just please stand, welcome the finance minister. Mr. Kasaija, we are happy to see you, sir.
Ready with Honorable Minister, you're most welcome. Please. I think before we take our seats, let's have the national anthem. Uganda national anthem, East African anthem.
Afrika Mashariki, tuwezeshe kuishi kwa amani, tutimize na malengo yetu. Jumuiya yetu sote tuilinde, tuajibike, tuimarike. Umoja wetu ni nguzo yetu, idumu jumuiya yetu.
Let's remain standing in observance of a 1 minute silence for the late President of Tanzania. May his soul rest in peace. We can take our seats. Sam, can you take over and take us through the remaining part of the program?
The minister has a very short time with us. I'm just going to give a brief executive summary for the benefit of the minister about some of the discussions we have had. Mr. Minister, you found us in our last panel session. With us in the panel is Mr. Chow, who's in China. We have Mr. Patrick Muhide, who is CEO of Standard Bank East Africa, formerly CEO Stanbic Uganda. With me on the panel is Dr. Edward Singoma. He is the managing partner of Power Capital Partners. We also have online Mr. Narcis Tumushabe, who is the managing director of FICA Seeds. We have also heard from Ivan Senyonjo, who works with an organization called ACDEVCO. So we have been having a very engaging discussion about the capital markets, the kind of financing we offer, and some of the things that a company would need. We have spoken about some of the small examples of businesses we fund. If a business sells as much as 40 million in a year, they can receive money from the capital markets. We have also funded the big projects. Companies like Blackstone, which funded Bujagali, which is worth $25 trillion, gave some 120 million for Bujagali and was able to help us with our power issue. We have investors like TPG Global, who have invested in Airtel. So we're doing the big, we're doing the small, we're doing the medium, and anything in between. We just have been discussing about the need that businesses have to run their companies professionally. We are talking about preparing Ugandan companies to compete globally, not just in the East African community, not just in around here, but to make them ready for growth and hopefully to create jobs and to ensure that Uganda enters the middle income status and remains there. So in a nutshell, that is some of what we've been discussing. I think we are going to close this session at this point, and then we're going to have we're going to hear from a few speeches. We're going to get a speech from Mr. Daniel Birungi, who is the Executive Director of UMA, who is going to contextualize our partnership, the partnership between the Capital Markets Authority and UMA, and what we hope to attain with that partnership. And this meeting today is one of the results of that partnership. After he is done, we will hear from Mr. Keith Kasaija, who is the CEO of the CMA. He's also acting chair of the CMA here, representing our chair. He will also speak from the capital markets point of view and give us a strategic direction. And then we will hear from the chairman of the Uganda Manufacturers Association, Ms. Barbara Mulwana, who will invite you to address not only the participants of this meeting here, but we also have close to 100 or so Ugandans who are following us on social media. So without, allow me please hand clap for Dr. Edward Singoma as we depart the high table. And please allow me to invite Mr. Edward Birungi, sorry, Mr. Daniel Birungi to address us. Thank you very much.
Honorable Minister, you're most welcome to the Uganda Manufacturers Association, and we thank you for making the time. Today, we are here in fulfillment of a component of an MOU, a Memorandum of Understanding, that we've signed with the Capital Markets Authority. The reason why we've signed that Memorandum of Understanding is a belief that there's a limitation in the knowledge available among our members on the possible financing options beyond debt financing. Before you came in, there have been several discussions around what options are available. And I can tell you that the members here have been furiously taking note, indicating that this session was indeed long overdue. Before you, Honorable Minister, I wish to acknowledge the presence of the chairman of Uganda Manufacturers Association, who you know very well, Honorable Her Excellency Barbara Mulwana. She hates being called Her Excellency. We also have the CEO of the Capital Markets Authority, Mr. Keith Kasaija, seated right next to you. We also have a board member of the Capital Markets Authority, that is Dr. Martin Francis Cheyune, also with the Roofings Group. I've also noted the presence of the chairman of the Makerere University Business School Governing Council, Haji Ngobia, who also happens to be a representative of the UMA at that entity. Honorable Minister, without taking too much of your time, I know you're running to the next engagement. I wanted to give a brief about the MOU that we've signed. The MOU was signed just 41 days ago. And I think we, as members of the UMA, need to applaud the Capital Markets Authority that in the space of 41 days, we've been able to activate the MOU. That is rare and a welcome move, and it shows that the Capital Markets Authority is committed to this initiative. The aim of the MOU, among others, is education, which is happening today. Among others is clinics with our members to personally walk them through the processes that are required to access the capital markets. The aim of the MOU is to also have discussions with the ministry around the statutory hindrances to accessing financing, issues such as withholding tax on dividends and related, for local capital and related taxes that we feel, if removed, could enable us access more financing. Honorable Minister, as the UMA, we are very cognizant of the wealth of money that stands with us today in the savings and credit schemes, the SACCOs, all around the country. And we believe that government has a role to play in activating the SACCO money beyond just member payments and member loans to actually productive use to help the economy. We believe that some of the options available is government offering infrastructure bonds. We know that we are grappling with financing for the SGR, for example, and that we could leverage some of the money that's available here to then finance these projects. The projects would then be Ugandan owned, and the impact would then be that government moves out of the public space and instead utilizes some of this money that's locked up, so that the cost of credit then eventually goes down. That's our absolute belief on that front. Honorable Minister, we also know that there are a number of finances that are locked up in real estate in this country. We believe that the Ministry of Finance has a critical role to play in unlocking these finances by making mortgages more affordable for the average Ugandan, because it then means that rather than sleeping on 500 million shillings that is equity in my house, I could liquidate the 500 million shillings and put it into productive use. We believe that there is a critical role for us to play as government in this regard. Honorable Minister, while capital is the key point that brings us here today, I believe that it would be remiss of me not to mention the fact that even as we solve the capital problem, and indeed solve it we will with your help, we also need to have a discussion around market access. Because as effective as I am at mobilizing capital, as effective as I am at production, at the end of the day, if I'm unable to sell the items that I have produced, it's all for naught. Honorable Minister, you're well aware of the challenges that we've been having around access to Kenya, related to sugar, related to milk, and we believe that government needs to come out and assist unequivocally the manufacturers in these sectors towards addressing the challenges of access to these markets. You and I both know and have seen the reports of the 1,500 people who have been laid off at one of the companies involved in this sector, which means that we are bleeding jobs at a time when we should be mobilizing jobs, which is not something we should do. Honorable Minister, you and I also both know that at the moment, we have over 350,000 metric tons of sugar that is stuck in our warehouses and is unable to be sold because our colleagues are not opening up the markets to us. Honorable Minister, I will not go into the discussions on the access to Rwanda because they are also very familiar to you. And our appeal is that as we go into the new financial year and as we go into the new government, effective May, that these are front and center of some of the items that we will look at. Finally, Honorable Minister, I wish to congratulate you, congratulate His Excellency the President upon your election to serve Uganda again for another 5 years. We are very optimistic about the relationship we have with your ministry and with the government of Uganda. And we believe that there is a lot that we can do over the next 5 years. Because as you've already indicated as government in NDP3, manufacturing is the heartbeat of this economy. And we need to do everything we can to build it even further. Thank you. Technology challenges, Honorable Minister. Like I was saying, I wish to stop here because I know a lot of what I was going to say is going to be said by Chairman along the way. But thank you so much for coming to the UMA. This is your home. Please feel at home. Thank you so much.
Yeah. Some? I think the CEO, CMA, next.
Thank you very much, Honorable Minister, for making it, for gracing this occasion. Thank you very much, UMA, for putting this together, for giving us an opportunity to share our knowledge with you to advance part of our mandate. So I thank you very much, all of you, for taking the time from your busy schedules to attend this networking luncheon. I'm now speaking on my own behalf as CEO, but also on behalf of the chairperson of the board, Mrs. Jacqueline Opondo Kobusinje, who was not able to make it this morning because of a doctor's appointment. So I want to thank management of CMA and UMA for working together to organize this luncheon, and all the panelists and speakers for honoring our invitation. I think they need a round of applause. That was very good engagements from all the panelists, both here and online. As the ED said, the manufacturers faced several challenges, which he did share when we signed the MOU 41 days ago. In addition to availability of affordable funding, there's an issue of consistency of government policy. I think there were very good measures in the last budget to do with taxes on goods that were previously imported that can be manufactured locally. It's just good if those measures are, if producers are assured that these measures are in for the long haul. There's also challenges of low aggregate demand, and that's why I think Mr. Birungi was talking about markets. Power, I think that's one of the things that the President has echoed several times. Low infrastructure, low financing costs, low labor costs, and low power costs. I think that's one of the biggest challenges, but I'm sure that work is going into addressing that. So this, as part of our public education mandate, we have been engaging with business owners to educate them on the merits and demerits of market-based financing, which is essentially non-bank financing. We have continuously heard about the cry of the cost of interest rates, of the high cost of interest, and yet there are many alternatives through the capital markets where patient capital can be obtained. If there's a time when patient capital was required, I think it is now, as the world economy is ravaged by this pandemic. So this networking luncheon provides yet another platform for the dissemination of this message. Part of our role as CMA is to remove impediments to development of the capital markets. We license intermediaries. Power Capital Partners is one of our licensed intermediaries. And we also promote confidence in the capital markets by ensuring the people we license operate ethically, professionally, and of course, legally. We are cognizant of the fact that most businesses in Uganda are family owned, with business owners hesitant to bring on board outsiders. This luncheon therefore aimed to address some of the fears and challenges of business owners, such as how to tap into non-bank financing or market-based financing while retaining control of their businesses, and how to make businesses attractive for strategic partnerships. Before an investor comes into Uganda, they have the option of setting up a new plant or partnering with an existing plant. Now, the issue is, how do you present yourself to a potential investor to be a partner? And all those we have been hearing in the past conversations, how to maximize value when raising capital. I think Mr. Mohire talked about that. And the alternative forms of market-based financing that can be raised by businesses. We believe that addressing these fears and challenges will increase the UMA members' capacity to access market-based financing. And given the importance of the manufacturing sector, the Ugandan economy, it is important that UMA members have access to this patient long-term capital to help them scale up, create more jobs, and drive economic development in this country. Now, I know I've been emphasizing long-term capital, but you can also access working capital through commercial paper. Commercial paper is not something that's been used, and here I want to challenge our intermediaries to seriously think about how to develop the whole framework and the delivery of commercial paper, or help manufacturers use commercial paper to access short-term financing, which is basically 3 to 9 months. It doesn't require security, which I think is one of the biggest problems that has been raised in our side discussions with my board member. So through this luncheon, we also expect to see UMA members benefit from our issuer education program. This program involves the use of external consultants who are transaction advisors. I've seen a few of them around, who reach out to business owners and founders, providing information on and tailoring market-based financing solutions for businesses that based on their unique needs. This program has been running for the last 2 years, Honorable Minister, and has registered success with businesses raising a total of about 45 billion privately. So I think that requires a round of applause for the transaction advisors who are in the room. 45 billion is a small amount of money, but it's a signal that there's a lot of potential. We've made an estimate that if Uganda's GDP is $35 billion, 1% is $350 million. So in order for the manufacturing sector to grow, to contribute more to the economy, they need about $350 million at a minimum to move 100 basis points additional to the GDP of this country. So these consultants present here today, and I therefore implore all business owners present to talk to them about the most optimal market-based financing solution for their businesses. Honorable Minister, ladies and gentlemen, in conclusion, I would like to thank my staff, of course, and UMA staff for organizing this luncheon, and all the UMA members present for attending. We have been having a practical discussion, and one of the things we've been focusing on is moving away from theory and making this conversation as practical as possible. And I really hope that the members who are here have benefited from the practical insights from the skilled and experienced people who have been able to put together. Thank you very much, Deloitte. Thank you very much, Stanbic Investments, headed by Patrick Mahire, Ivan Senyonjo, Edward Singoma, and Nasis Tumushave of FICA, and all the other speakers. Thank you very much. I'd like to invite the chair of UMA now to give us her remarks.
Honorable Minister, we welcome you to your home, which is Uganda Manufacturers Association. Welcome. I really would like to thank the CMA, because this is a very important discussion because of who we are. We are Uganda manufacturers, but we also have there's a certain DNA about us. Most of the people that you see here, Your Honorable, are SMEs, but really they're family-owned businesses. Now, I think family-owned businesses is not a dirty word. In fact, I think it's a great word, because there are certain things that we come in with. The first thing that we always look for as family businesses, we're here for the long term. We don't want to do things short term. We're looking long term. Why? Because we want to look at generational wealth. Now, I know back and forth, some people are saying we want our children to work here. No, what we're looking for is for our families to develop wealth from generation to generation. So we are long-term thinking. The challenge we have is that while we're thinking that, a lot of the funding that we need to develop, to grow, go into new markets, go into new products, is all very short-term looking. And therefore, that's why it's particularly important that capital markets is here, because they give us that. They're telling us how we can get there. And I commend them and I thank them for this journey that we're starting to walk with them, that we can educate us on ways in which we can start plugging into this long-term finances, which is then related, which is closer to where we are as long-term looking people. So thank you, capital markets. I believe that there's certain things that I believe in. I believe in God, but that's another thing. You start with a relationship, and that's the relationship we're starting with capital markets. We've put it down on paper and the MOU that we're signing. And we're hoping that this relationship is going to give us opportunities. And this is one of the opportunities that it's bringing us. And this opportunity will then help us develop and grow as companies. And as we grow, we then we grow this country. We grow it and provide jobs and goods and services to our people. So that's the importance of this. We're building a relationship that started to give us opportunities that will then give us develop into opportunities that will build this country and hopefully grow it into giving us jobs to the people. So that is how important this is. Honorable ministers, we as Uganda manufacturers and the people in this room and the SMEs here are actually your best ambassadors. Because when everybody's coming here to this country, they're going to look, if I want to go in services, how are the services here doing in Uganda? How are the manufacturers? I know my competitors there, but my brother is there. How are the plastic and Afroplast doing? How is so-and-so doing? So it is really in your interest that we succeed. Because when we succeed, other people can then see that there are opportunities here and then start putting money here. But if you disregard us, who you found here, by what? I think like the ED said, don't put too heavy taxes when we are doing well. Just when we're doing well, we're just coming out of COVID, we're struggling with COVID. I know the government is also struggling with COVID, but we are also struggling with COVID. We are imploring you, please don't put any new taxes on us. Because when you do that, going back to the relationship, you're not helping that relationship, because then there are no opportunities. We're then putting money that we could have used in developing our businesses. So we thank you for coming here. We thank capital markets. We are your ambassadors. We are here to stay, and we are here to develop this country. And we're looking for affordable ways in which we can do it. And we thank capital markets for giving us this training that they're going to give us on learning how to get ready for this financing. So of course, I'm going to give a little plug to my brother. We need more of these things. Please give him some more money. Give him some more money so he can educate more people. Today, it is the manufacturers. Tomorrow, I want to see a lot of those people who are in Chikubo, who are the traders. That's how we all start. A lot of us started. We all started by trading, then we went into business. We want them to educate them and tell them, listen, it's possible. Come here. Some of the things that they're afraid of is Sente. But we want them to go out and educate them, to move them into manufacturing, to then help you in, what do they call it? Import substitution. And then this country grows, this country becomes great, but it all starts with you. So, Honorable Minister, we thank you. We thank you for the time that you're here. We'd like to thank all the other sponsors and the contributors, Deloitte and Tush. Thank you so much. I'm sure you're going to see a lot of us. We'd like to thank all our speakers that we had, Patrick Muhire, and the passionate seed farmer. We'd like to thank, who else am I leaving out? Sorry? Adevco and Pearl. Yeah, that one. Thank you so much for your support, and let's have more of this. And I thank you so much, all UMA members, for attending this in good numbers. Please take a leaf. Maybe it's not something you can start now, but I'm sure it's a journey that you can take. Capital Markets is here to help us. Thank you so much. And with those words, I'd like you to please give. Okay. We would like to launch. Okay. They, you know, when you're here, they want you to plug things. So apparently you have to come and plug yeah. Until there's COVID, just show him. Yes. So Honorable Minister, on your way here to give your opening remarks, please come and launch this. Just wave to it or something like that. But Honorable Minister, we are very honored that you're here and that you took time. We do not take that for granted, because I know you're a very busy gentleman. Your docket is really big. So the fact that you're here shows that we are important to you, even though sometimes you give us some problems. But we thank you so much. Honorable Minister, please come and give us your remarks. Sanitizing.
The chairperson, Uma, the ED, Uma, chairperson, CMA, business captain leaders who are here. Is it good afternoon or good morning? Good afternoon. I'm sorry, I think there was miscommunication between the office here and my office, because I was told to be there at 12 sharp, and I've tried to be here at 12 sharp. And yet you did business in the morning. I would have wanted to attend that business in the morning if I had been informed. But I hope I will get a brief of what you have discussed. Now, I want to thank women members for taking off time to attend to this engagement. And I'm very greatly honored to preside over today's engagement. Barbara, don't say, this is my job. Yes, I'm busy and all other things, but you see, in the government, you have to learn how to prioritize. You are my backbone, so even if you wanted me to come at midnight, I would come. Believe me. In a special way, I want to thank the management of Capital Market Authority, who are part of my staff, and of course, the staff of Uganda Manufacturers Association for organizing this engagement, among other objectives, to reach out to women members to educate them on alternative non-banking financial sources, such as private equity, private debt, public equity, and public debt. In Uganda, we have a culture, kange, kange. I hope you understand it, if you understand our language here. Mine. I have seen businesses started, thrived, but the very moment the head of that family goes, then the children start fighting among themselves and the business collapses. Haven't you seen that? Am I talking the truth or I'm telling a lie? The truth. It is because we look micro. Business is business. Family is family. Actually, you should organize a seminar where we can even invite these people, the traders, and show them that they must separate between family and the business. That's why you hear the number of failures of businesses it started are they collapsed. 2-3 years, they have collapsed. A man and his wife starts a business, they don't pay themselves a wage, they simply draw away money from the business. And by the end of the day, the business is undercapitalized, they can't pay rent, they can't restore, the next thing the business is dead. So I would want to give a challenge to Uma to organize that kind of seminar where we can educate people to separate business from family. Two, we all tend to depend on what we as individuals have got to invest into the business. We want to move out from there. By the way, there is a lot of money in Uganda. If you don't know, one day I will tell you the amount of money according to Bank of Uganda that is floating within Uganda. But either it is sleeping or it is an assets that are sleeping. The money is not being used to generate more money, to generate more jobs, to generate more business. So, Capital Market Authority, I want you to take a note of that. I am aware that in February 2021, CMA and UMA cemented their relationship by signing a memorandum of understanding that aims to specifically increase access to low-cost non-banking financing among Uganda's manufacturers. Non-bank financing. And I've told you there is a lot of money because I'm in charge of the economy. I know what I'm talking about. There's a lot of money seated, sleeping. And you people who are doing business, who are manufacturing, you are suffering for lack of additional capital to expand. If you go to those developed countries, it is money like I'm talking about that has helped companies to grow big and become international. Yes, the founders are there, but now the business must be owned by other people who have got money to save. Instead of keeping it under the mattresses like we do sometimes in Uganda here, or putting it in a savings account and it earns very little money, it does not circulate around to increase production and create more wealth. It is there. We need to tap into that money. The manufacturing sector plays an important role in the development of Uganda's economy, as you know. I made this statement from the beginning. You are my right hand in developing this economy. You have heard we want to keep poverty out of Uganda. You have heard at the time the president used the kida kyonka, people who are working only for their stomach. We still have plenty of them. We want them to get out of that state. But to get out of that status, we must lead them where they can put their energy and their little money. And when they have put their energy and little money, how do we expand them? As business people, you know, you will reach a stage where you need more further money, but your resources are exhausted. Either you have invested in certain things which you cannot liquidate overnight without injuring the business. So that's where Capital Market Authority, in my view, will come to help us. Vision 2040 aims to transform Uganda from a predominantly peasant and low-income society, this you are familiar, to a competitive upper middle income country. The vision highlights the importance of manufacturing and value addition in facilitating an export-led internationally competitive economy. which is able to spur growth and provide employment opportunity to Uganda. Now, yesterday, if you watched on TV, I was really upbeat on this question of increasing employment for Ugandans. And I'm appealing to you people who hear the business captains. Before you take a decision, either to increase the size of your operations or to reduce the size of your operation, the question I want you to ask, how many jobs am I going to lose in case you want to restructure? How many jobs am I going to create? We need as many jobs. We are, I don't know this, you may know these statistics. Our institutions of learning are offloading 500,000 young people onto the market in Uganda. Now, we must work. For us, we are drawing a plan. We have drawn it plan. We shall expose it sooner than later. How to create those 500 new jobs for the youth. If these youth are left there where the things are moving now, looking at it from politics, but also from the social point of view, it's not going to augur well for us. It won't augur very well. I don't want to see youth, what is the right word? I'm looking for the right word. Gallivanting, there is a word we used to use when we were still at school. Gallivanting, walking on the streets, doing nothing. Dangerous. Be it in rural or be it in urban. People should be engaged. They should be engaged to produce something so that they can earn their wealth legitimately. Many of you have traveled outside Uganda. I don't think there is any country, in fact, me, in my view, I don't see why Ugandans we should be very poor. No. We have virtually everything in this country, you people, including this one you are thinking. That's a big resource. There is no reason why in Uganda people should remain poor. The only challenge is either we don't have the technology or the manpower to turn whatever we have here. If I tell you the story of the minerals, in fact, one person from the Minister of, actually, it was not from the Minister of Minerals. He is a businessman, I will not mention his name. He said, Honorable Minister, you are struggling with oil. If you took a different eye and looked at one or two minerals, you will generate that money much faster and with less investment. So I'm telling you, you business, you can come privately and I lead you to that man who think that we can generate far more wealth and make more money from a certain mineral, which I don't want to discuss right now. As a government, we recognize the role that alternative non-banking market-based financing will play in realization of the promise that the manufacturing sector offers. Capital Market Authority, you have now a big role in this new NDP 3. You have a big role to play. Access to patient market-based capital will contribute immensely to the broad national goal of economic transformation. In seeking to highlight the potential of non-bank market-based financing, private equity, which is the capital infusion in non-listed companies, has over the years 17 to 18 provided a total of 1.4 billion to 10 companies, three of them being manufacturers. As a further demonstration of the potential of non-bank market-based financing, since the capital markets were established in Uganda in 1996, a total of 1.12 trillion shillings has been raised by different companies in the market, of which shillings 272 billion was raised by manufacturers. 290 billion was raised through the primary market, 570 billion through the secondary market, and 262 billion by corporate bonds issued by non-listed companies and organizations. However, despite the availability of non-bank market-based financing alternatives, the private sector in Uganda is yet to fully tap into this alternative that complements short, medium-term financing. Ladies and gentlemen, to increase access to market-based financing, the government of Uganda will support with support from development partners is at an advanced stage of launching a deal flow facility. The deal flow facility will be a one-stop incubation center where Ugandan businesses will receive business advisory and support services to make them investment ready and attract to the providers of a non-bank market-based financing. I would wish to urge all medium-sized manufacturers to take advantage of this opportunity once operations of the deal flow facility are launched in the forthcoming financial year. I would also wish to reiterate the call by chairperson of the CMA board for manufacturers to engage CMA's issuer resource persons. I would also wish to encourage business owners, founders, entrepreneurs to engage them, and they will be able to provide advice on capital raising needs, as well as unpack today's discussions. In conclusion, I'd like to thank CMA and UMA for partnering to organize this networking engagement, and I look forward to seeing more UMA members embrace and access affordable non-bank market-based financing and ultimately growing the economy. Now, we talked about the market access. Yes, we are working on that one. We can discuss that, can be established on another day. We are working tirelessly to make sure that whatever you produce gets an access, you access market, because without a market, there's no story that we are telling. And lastly, I should not increase taxes. Now, this is a very nice point, because I need taxes to do certain things for you, but also need money to work so that you expand your business. Again, that would be a subject of another talk, another day. Taxes, I need them, but also you need money to expand your businesses. So there is a need, we are looking for an equilibrium there. It's a conflict of interest in that issue. With these words, I wish to thank you, all of you. Thank you very much for coming and thank you for participating. I look forward to getting a report of what you discussed to you people when I was not here. Thank you.
Thank you very much, Honorable Minister. I think another round of applause for the Minister. Thank you very much. And now I would like to call upon Director, sorry. As the Minister comes, Director Research and Market Development, Mr. Dixon, prepare to make a vote of thanks as soon as the Minister is here. Yeah. Thank you. And I would like to call upon Madame Claire and Annette to start preparing, because as soon as the Director Research and Market Development, Capital Markets Authority is through, we should be able to serve lunch. Please make sure you partake of our lunch before you leave this room. Thank you.
So they just want to make, they wanted us to make a mention so that people can.
Okay. After this session, we also have some more what we are calling business clinics, one-to-one with the Capital Markets Authority but also amidst us here, we have Uganda Development Bank. They would also, those, where are they seated? Uganda Development Bank? Oh, they are around. Those who may need to have a one-on-one with Uganda Development Bank, please, you are welcome. Pride Microfinance, we are also around. Where are you? Pride Microfinance, yes, they are also around. Those who want to discuss money issues, we have those people around. And our capital partners, they are also around. Those who want to have a chat with them, please, after this session, you are free or a one-on-one. And soon after the vote of thanks, we shall go out with the panelists for a group photo. Oh, yeah, just at the front here, we shall have a group photo, and also another launch with the sanitized copies of the directory. For the directory, UMA directory is quite important. It's having a lot of contacts for our members. Yeah. Okay. Okay. Edie, woman. You don't want to. Photos. Maybe, Edie, would you like to say something more before you launch us?
Honorable Minister, this is a copy of our members directory as at 31st December 2020. It includes all our members and our member support companies. From what we've had here today, there is also a need for a similar, if electronic, version of providers of capital. And I think Capital Markets Authority can take this up and work with you to push this forward so that people have a single source they can go to access information and financing options. Thank you. Thank you, Honorable Minister.
Oh, launch. Now I want to take this opportunity to launch the WUMA Business Directorate 2021.
Yeah, this directory is online, and even in the bookshops, it will be available. So can I now request Director Dixon Zambia for a vote of thanks?
Thank you very much, Mr. Mubarak. Honorable Minister, Chairperson Uma, CEO Capital Markets Authority, all dignitaries, all protocol observed, good afternoon. Allow me to give a vote of thanks. Allow me to start by thanking the Honorable Minister for making time. I know you have a very busy schedule, but you found time to be with us, and we really appreciate that. A round of applause, please. Additionally, for captains of business, business owners, business founders, entrepreneurs, I know you also have very busy schedules, but you've taken time to come and participate in this discussion, participate in this engagement. So we'd like to thank you, and please clap for yourselves. To the management of the Uganda management of UMA, we thank you for putting together this particular event. We thank you for all the effort that has gone into this. And we hope to engage further with you. We hope to roll this out to other parts of Uganda so that business owners, business founders can also benefit from this type of discussion on alternative non-bank financing, which complements bank financing. And bank financing is usually short to medium term. What we're talking about is long-term, which makes it patient. It can actually wait. So we hope to expand this discussion and take it to other regions of this country. I'd also like to thank my Chief Executive Officer. He really embraced the idea of engaging UMA. He embraced the idea of taking this message out and spreading it as loudly as possible. So a clap for my Chief Executive. And not forgetting my team. I'd also like to thank my team at the office and other staff at CMA for all the support that they provided in putting this event together. So ladies and gentlemen, with that, I'd just like to thank you all, and we look forward to more future engagements. I thank you.
Thank you, Dixon.
Let me go back. Just for emphasis, because I thought I did not give it sufficient emphasis. It's my job, but I want also you to join me. Mobilizing savings. Mobilizing savings. And not under mattresses. Yes, putting up buildings, yes. But what's the point of investing $500 million shillings in a residential house where you are going to sleep? Some of you are working abroad, you are living somewhere, you may even sleep in that house once a year. What the use? I don't see it. Ugandan is real. Why? Does it not make better business? Because that money should grow. That money should grow. It should be put in an enterprise. Either you running that enterprise or lend it to these people who have got businesses and they are starving of capital. Working capital, they have to go to commercial banks. Yes, I'm not trying to be campaigning commercial banks, but with their price, really capital market, we must work on this issue of mobilizing Ugandans to put money into businesses so that the money grows, the economy also grows. Not to keep it in fixed assets which are not paying. I think capital market area, I'm going to write to you to give. You must now move up and educate Ugandans how they can have their asset, their cash invested in real business, not under mattresses and keeping it in some small a bank account. You find somebody has got half a million, $500 million, 1 billion, and keeping it in a savings account. Why? I'm not campaigning the banks. No, far from that. I'm saying that money, when you have no use for it, go and buy shares in a company, and the company with that money to produce more wealth for you. I hope I've made my point very clear. Thank you.
Hello. Okay, thank you very much, Honorable Minister. Another round of applause for the Minister. Claire, it looks like the Minister is about to go, but I thought he would be partaking of our lunch. His time is not allowing, but nonetheless, please make arrangements to usher in people for lunch. And as we do that, I would like to call someone from UDB to say something and give us a prayer for our lunch. UDB.
Good afternoon, ladies and gentlemen. It's a hard time to speak when people are gearing up for lunch. But my name is Susan Nangwale. I am the manager equity in Uganda Development Bank Limited. I have come with my colleague, John Kamara, over there. He's an equity analyst. Greetings from our managing director, Madame Patricia Ojangole. She could not be here. Uganda Development Bank is a government-owned development finance institution. We are wholly owned by government, represented by the Ministry of Finance and State for Privatization. I was very respectful when the Honorable was here because I should have been on my best behavior because our shareholder was present. So a development finance institution, a commercial bank, we are non-deposit taking, and the mandate of institutions like ours is to ensure that we have socio-economic impact over and above sustainability. So we normally play in spaces that conventional banking would not. For example, we can go into infrastructure and other areas that would not make business sense for conventional financial institutions like banks. So UDB has a number of projects. We have priority sectors that we follow, such as agriculture and agro-industry, manufacturing. We do also have a partnership with the Uganda Manufacturers Association, a memorandum of understanding rather. We are also into human capital development, which is basically health and education, and mineral development. So one of the things we want to see is that we craft solutions for the market, and the development of equity, private equity as a product was one of those interventions. Now, what do I mean when I say this? UDB can take an equity stake into qualifying businesses, emphasis on qualifying, up to 25% of the equity value of that business. We can play into early stage growth or pre-revenue companies or startups which meet a certain level of basic requirements. So when we take a 25% equity stake, we sort of become part owners of the business, and there are certain conditions precedent that you must meet thereafter. So I know many of our businesses are family owned, and they fear that letting in a party that is not family dilutes their control, and that the person may eventually grow to take over the business. But we have to have a mind shift. We grow through merging, like we are told, through acquiring partners and learning and infusing other expertise and skills into our businesses. So there are various other equity-based products that we have, like mezzanine, you've heard them say, conversion notes, but I don't want to go into what we call financialese. Those are details. Just what I need to tell you now is that private equity investment is available as an option from Uganda Development Bank. Okay, and we also invest in funds which have a similar mandate to ours. Now, the benefit of investing in a fund is that it can then in turn invest in other small and micro enterprises that would not be feasible for us as UDB to invest in. So if you have revenues and assets below a certain threshold, we may refer you to a private equity fund in which we have invested, that they'll be able to help you. We are already in talks and advanced stages to invest in such funds. For purposes of non-disclosure, I cannot mention them, but we can talk when you come. So I was told to pray for our lunch. So let me now pray. I will pray in Jesus' name because I'm a Christian, but those who don't, just say amen to your own God in your heart. Okay, Father, we want to thank you for this time. We pray that what we have learned here, we will take to heart, digest, and put to work. And we pray that your hand of blessing will be upon it and will be upon our businesses. Us as business owners and us as financiers, may the work we do be profitable. And as we go to have our lunch, we pray that you bless it, bless the hands that have prepared and provided it, and bless us as we partake of it. I pray all this in Jesus' name. Amen.
Amen. That's a wonderful prayer. I'm sure the food is going to be sweeter just like that prayer. Very, it was a deep one. We're going to be inviting you for lunch. Lunch is ready. It is a 3-course meal or 4-course meal. I've seen quite huge proportions. I can't wait for us to get to that. We are going to be led to lunch by a team. And as we go for lunch, we are going to hear from one of our investor resource people. The CMA has what is called an issuer resource program. We have people, experts, that can meet you at your offices or your management, and they can break down what the capital markets are and what instruments are available for you at your own convenience whenever you need them. At this moment, I'm going to call Mr. William Nyakatura to just say hello as we begin to go for lunch. Mr. William Nyakatura, please speak to UMA members.
Yeah, thank you. As William prepares to speak to you, I just want to remind you just of a few things. One, there was a survey form in that folder. In fact, as you go for lunch, just leave it on your tables. We shall pick it. And our manager training just wanted to make one announcement. Then William can come in. Thank you.
Ready to work. We have a program here called Ready to Work, and we ask you to take interns, the interns that we prepare. So there is a form. So if you want some interns, we have prepared interns from various universities and vocational schools. You fill and leave it on the table. We shall pick it. Then the other announcement is, as training, we organize courses regularly. We have a course on energy management to take place on 9th by Zoom, it is half day. And then we shall have another course on EFRIS, electronic submission of invoices and receipting to URA. That will take place on 29th April. So the letters, we shall send the letters to your emails. Thanks a lot.
Thank you, Mr. Charimpa. Yeah, William, take floor.
Good afternoon, everyone. Can you hear me? Good. My name is John William Nyakatura. I work for Kinsman Advisory, but I am also part of the information resource person. This is a program by the capital markets where members like me go out to talk to business owners like you, and we delve into the process of how do you get private equity. Think of us as the advisors or the specialist that comes and tells you, paint this wall, do this proper, and then the investor will come. And this program has been running for 2 years. I have some clients that are members of the Uganda Manufacturers Association. I'd like to encourage that if there is a path you want to take in raising capital, contact the capital markets or take my contact. And we can come down and have this conversation. How do you raise private equity and private debt? The information shared by all the speakers here is vital. And after COVID, I think this is the time when you want to talk to how do you raise capital and who can help you go down that road per se. That's basically it. Yeah. Okay, I've been asked to talk about some of the small transactions we've done. We've done one in the medical sector where there was a young man. When I say young, he's younger than me. I'm 38. He is probably 37. And that young man needed $4 million. And he was plagued with debt coming from banks and the issues that you have been talking about. And when we got him a private investor, they were able to realign for him his need for working capital and capex in ways a bank could not. There's also another gentleman I'm working on whose balance sheet needs to be restructured. He already has too much debt, but how do we now bring in equity? How do we align the tenures of cooling down that debt that he has? This particular client is in the Uganda Manufacturers Association group, and we're going through those conversations of what do you have to give in order for this investor to come in, and can this sector actually grow per se?
Thank you very much. At this point, we have no further speeches. It is time to power our engines.